Welcome to Galaxy Brains.
An infinite amount of cash.
I'm your host, Alex Thorn.
The U.S. banking system is sound and resilient.
Bitcoin made a new all-time high.
If you're not long, you're short.
Satoshi's going to come on there, laugh hysterically, go quiet. All Bitcoin's going to be erased.
Bitcoin's the best crypto out there.
Bitcoin is going to zero.
Welcome back to Galaxy Brains. As always, I'm your host, Alex Thorn, head of firm-wide research at Galaxy. Bitcoin not zero, and we have a great episode for you today. Marty Bent, founder of TFTC, managing partner of 1031, board member of Cathedra Bitcoin, is joining us. He's back. He was on the show about a year and a half ago. So much has changed in the world of Bitcoin. We're going to talk with Marty about mining and AI, about market sentiment, about the strategic Bitcoin reserve, and much more. It's a great interview. I know you'll enjoy. We'll also connect with our good friend Bimet Abebe from Galaxy Trading, as always, to talk about markets, material softness emerging in the U.S. economy. It's affecting risk assets like Bitcoin and crypto. We'll get into his theory about what's happening and what might happen through the rest of the year. And before we get to that, I need to remind you to please refer to the link to the disclaimer in the podcast notes and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. Let's hop right into the show. Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Bimet, welcome to Galaxy Brains.
Thanks for having me.
So you are in Colorado for ETH Denver. So this is a rare remote Galaxy Brains for us.
I know. I got the whole buffalo behind me. I feel like a cowboy on Yellowstone.
Well, look, even though you're not in the office, it's been a big weekend and week for markets. We'll talk about crypto markets a fair amount as well. Bitcoin's down in the 86K range, so we'll get to that. But before that, I mean, there's a lot happening in traditional markets I wanted to ask you about. Even in the beginning of this week, when cryptos were falling significantly, on Monday and Tuesday, basically everything was down. Stocks were down. Gold was down. I don't know, man, what was up when everything was down? What were people buying with their sales of all these other assets?
So you had a pretty meaningful turn in the U.S. equity market. And I think that's a function of folks reassessing their growth outlook for the U.S., right? Folks are actually starting to get concerned with, how aggressive, the U.S. economy is going to grow on and go forward and kind of some of the metrics around that. But just starting from like a consumer, right? Consumption is a large part of the U.S. economy. You had January retail sales that were super soft, right? Then you start to think about the service sector of the U.S. economy, right, which is very robust. And you had services PMI last week print in contractionary territory for the first time since 2022, which was, kind of the whole taper, move that you had as we started to go from 0 to 5% interest rates. And so U.S. consumer is starting to look a little bit weaker. The services sector of the U.S. economy is starting to look a little weaker. Then you go on to housing, and you've had some relatively soft housing data in new home sales, right? And you're kind of at this point where in the equity market where valuations are really high, right? Like by any historical standards, valuations were super high. Positioning was very stretched from the standpoint of, if you look at cash balances amongst institutional investors, they're at very, very low levels, right? You had commodity trend following accounts that were likely big sellers on any move lower. Retail had done a significant amount of buying in January and February of this year in equity markets. And so you just kind of had this like perfect recipe of like data starting to look bad. That's going to hit growth, and stocks are priced to perfection, and folks started to sell stocks. Now, where it gets really interesting is kind of, if this continues, what is the possible, feedback loop? And one metric that constantly sticks out to me is that, about 50% of U.S. consumption is driven by the top 10 percentile of income earners, right? And so when you have like equity start to turn lower, there is a meaningful wealth effect that trickles down into the U.S. economy. And so, if you were to see an extension of this move in U.S. equities, it would actually become like even more self-fulfilling in a way, because you're just going to, a lot of the wealth of the top 10% is focused in equity markets and assets. And so, you're starting to get to the point where it's getting a little nerve-wracking. And when you have that going on, like crypto being one of the most riskiest of risk assets that you can buy, right? Folks are certainly not going to want to, pile into magic internet money, pardon my language, when, the NASDAQ's off 4 days in a row.
Yeah.
And when you couple that with the fact that Saylor did a large portion of his buying already, in terms of it was announced on Monday that he bought $2 billion and his convert was for $2 billion, and so he's a little tapped. And you had the Bimet hack, and so and then you've got the negative sentiment around memes, etc. And so it was kind of the perfect recipe for crypto to go lower. But what's really interesting as well, though, is part of the reason why we've had such a run up in Bitcoin is because Saylor has been buying, right? And his last corporate bond deal wasn't as well received. And his stock premium has started to go down. And so when Bitcoin prices go down, right, his ability to issue more equity and more securities in order to buy more Bitcoin actually goes down. And so it becomes this reflexive feedback loop into BTC price because of the setup
Right.
in the equity market. And so, yeah, we're in a very challenging spot. I think on a go forward, I'd be paying close attention to kind of the real stats of the U.S. economy. I think we're probably starting to turn meaningfully lower. I think the labor market is kind of where I'm super focused on, right? Because you've got Elon laying off a ton of people into the government job sector is going to start
Well,
to
it's
look
not
weak.
technically Elon, but yes, you mean the
It's not.
Doge initiatives. Yes. Yep.
Yes. Right? And private sector employment, has been, steadily coming lower over the past year. It's really been the U.S. government and state and local governments that have been propping up the labor market. And so if you start to see that turn, that could be the trigger for much more in terms of, folks putting their homes up for sale, and that triggering, a repricing of equity of homes, and then, that feeds back into U.S. equity markets. And so I'm paying close attention to the labor market, and I think that's softening. And another metric you can look at is kind of mentions of job cuts, like in news articles and stuff. And so you're starting to see some of those high frequency indicators of job reduction start to tick higher. And so I'll take a pause there. But yeah, I'm bearish on the U.S. economy, and that kind of makes me bearish on risk assets as a whole, and that includes things like gold. People tend to sell their winners when they're nervous about risk, and when gold's up 40 some odd percent in a year in basically a straight line, and you're nervous about owning assets, like, you're going to sell some of your winners.
Yeah, the things you made profit on. And if you had high conviction bets that are already not winners, like, people often hodl those and think that it's still a good bet, and it may be, by the way, whatever it is. Okay, that's super interesting. And here's a follow up here, Bimnet. I mean, if the Fed has a dual mandate, right? If let's say inflation's okay or whatever, it's mostly lower than it had been for sure. It's not at target, but it's lower. But the other part of the mandate is to, I don't know how I would say it, create policies that seek maximum employment, right? The labor market is, from a statutory perspective, is actually also part of the Fed's mandate. Now, I would say personally they have limited tools for this, but they have one very famous tool other than their balance sheet, which is rates. If we get into a deflationary cycle where labor layoffs give consumers less money to spend, or they have to then sell assets that they have to help live their lives, and that causes housing to go down and all this stuff, we can, I think, see how all of that is connected. If it goes that direction, what is the Fed's policy response, you think?
They're going to cut at least 3 times this year, would be my guess. And so they're going to, take rates into the mid threes, basically. And I think that's going to be entirely warranted. I think the kind of price spike you saw in CPI to start the year was more a function of seasonal factors and wildfires and other natural disasters and things of that nature. And if you look at like metrics like Trueflation or like apartments.com, like average rent prices, and kind of the stuff that can help you kind of augment the official statistics, like those things are moving lower in terms of price terms. And in terms of what we see ahead with the labor market, I do think there's material room for softening there. And so I think the Fed's going to be looking at core PCE that, is around 2.5, which is close to target, effectively at target, and a labor market that's going to be weakening. And so, like, if your idea of what neutral is somewhere around, 2.5 to 3%, and right now interest rates are 4.30, right? Like, you're going to be like, oh, maybe we should get to neutral. And that decision about like getting to neutral, the Fed likes to move gradually, but when it's cutting, like it can cut by 50 or 100 bips at a time, because like, why would you be in restrictive territory when you see all these signs of things cracking? And so I really do think that the risk is for more like of a 50 basis point move in the meeting that they cut next, or something even bigger. And so, yeah, the Fed is going to focus on its dual mandate. And I think in doing so, they're going to realize that they need to get to neutral pretty quickly. And neutral is probably at least 75 basis points away.
Yeah, it's a ways off. They've got to do some cutting. And then, we could talk about the balance sheet. The Fed balance sheet. I saw an interesting quote. I forget exactly what it was. Something about Bessent having talked to Powell. And, I don't think it's not like there were minutes from that meeting, but the Fed is still tightening the balance sheet, right?
Yeah, they're still engaged in tapering the balance sheet. And that is because, they increased the balance sheet by, almost $5 trillion,
Yeah, for sure.
during COVID,
But
et cetera.
when you
And
say
so,
tapering, that means they're selling securities into the market, correct?
they're not, yes and no. They're not reinvesting the securities as they mature off their balance sheet back into, securities.
So they're reducing their buying pressure in the market at a minimum. Maybe other stuff too, right? Yeah. So that also though can contribute like to the weakness in the market, which is also a sort of a factor enhancing the reciprocity of a downward move, right? So like, do you think that they would stop the tightening?
I mean, we're not going to go into QE anytime soon, and
I guess
if
that's
we
the question.
do if
I
we
guess that's the
do
question.
QE, it's going to be like more a function of like getting reserves into the market, not like outright purchasing securities, like in mortgage-backed securities and things of that nature. It'd be more along the lines of getting like front-end cash in the market, because the amount of reserves have become, not ample but like restrictive, and so. I think that's a less pertinent policy point at the moment. The main lever they have is kind of the front end of the curve right now. And I think, they're they're very reactive and not proactive. And I think that's what you're going to see here is they're going to start reacting to the data as it turns more negative, rather than like being like, oh, it looks like we think the data is going to turn more negative, so we should cut now. And that and to be honest, like let's be clear, like if Trump and Elon like cut $1 trillion of spending from the U.S. economy, like that's bad. Like the Fed is not going to miraculously come out and like offset $1 trillion of less spending.
Yeah, that makes sense. That's a fair point. I want to get Bimnet before we wrap. I want to talk more specifically about Bitcoin and cryptos. Obviously, Bitcoin for the first time, it's trading at the lowest level, around 87K as we record on Wednesday, February 26th, at the lowest level that it has traded since we got up into that 90 to 110 range, right? Bitcoin had traded down into like the 91 and 90K area like 7 different times since it first took that area and rebounded. But now in this environment that you've been describing, it has traded lower below 90K, and it is there. In fact, I believe Quinn Thompson, our friend, a steak dinner over a bet on this, which is fine. But the rest of crypto had already been well off its all-time highs, right? And Bitcoin was sort of like separated from the pack there, and now now it's repriced a little lower. I mean, I still think 87K is no giant cause for alarm at the moment, but it could go lower. How do you think about the crypto reaction here in general? Or is that, you made the point that risk assets, crypto as an asset class certainly is, and so it's getting affected. But is there, how do you think about crypto in this environment?
I think you want to own crypto when you get comfortable owning stocks a little bit more aggressively. And I'm not quite there yet in terms of being like, oh, it's a great time to buy NASDAQ. It's a great time to buy S&P. I really do think that you need kind of a shift in risk sentiment to kind of be a little bit more aggressive about, adding to Bitcoin longs or, starting, fresh positions. And so, I'm cautious here. I'm a believer that no position is a position. And if you don't have to be invested, you don't need to be invested. And so, I think it's kind of a wait and see. I think, let's say Bitcoin goes to 80K. I think that's totally feasible. I think I'm going to be looking for, positive price action to kind of, guide us. Like if we get through that 90K resistance area, previously support, now resistance, right? That is encouraging. And so, I think you just kind of trade the technicals around. You've got, 200 day or 200 week moving average, kind of a little bit below here. And, that should provide some support. And, if we go through 90K, it'll start to look a little bit more constructive. But yeah, I think right now, caution is probably the best thing to be, or cautious.
Right. That there it is. Beimnet Abebe is cautious. Beimnet, enjoy your time in Colorado, and we'll see you next week. And everybody have a great weekend, and think about Beimnet's theory on the market right now. I think it is such an interesting time, honestly, with the politics, the government spending, the rates, the inflation, the tariffs, the crypto adoption, which is still, moving fast in Washington as well, the policy stuff. So a lot to think about.
Yeah, I just one last point. I do think that if you're a long run investor and you're thinking about Bitcoin 2, 3, 5 years out, like this, your strategy doesn't change. You're constantly accumulating. You're buying on dips. I'm a firm believer that Bitcoin over the long run is going to be way higher. But just right here, right now, I think exercising caution is warranted.
There you go. Beimnet Abebe from Galaxy Trading, my friend. Thank you so much. Let's go now to our guest, Marty Bent, founder of Truth for the Commoner, TFTC, and managing partner at 1031. Marty, welcome back to Galaxy Brains.
Alex, it's great to be back, and particularly in your studio.
In the studio.
We were in PubKey.
We were. Also a great studio.
Great studio, but it was great to travel down to Battery Park.
Yeah, we're in a very interesting, corporate, Goldman's right next door, their headquarters. Citigroup is right down the street. I joke it's like Galaxy is kind of like Goldman Sats, or Get More Sats is what Crypto Graffiti's version of the Goldman t-shirt says. Get More Sats.
A little Trojan horse of a building we got here in Battery Park.
We are exactly. You should see if you go around to the bars around here, it's all just like TradFi banker people and then us.
Are they coming around?
Yeah. I think they're going to be forced to come around with Operation Choke Point being ended or exposed. Honestly, they're going to be forced to do stable coins for sure.
Definitely.
Well, the last time you were here, I think it was maybe 18 months ago. And you're right, we were actually up the street here at PubKey. A lot has changed. That would have been summer 23, I think. So Bitcoin was probably 25K.
Yeah.
I think it was in between BlackRock announcing their ETF in June of 23 and Grayscale winning that court case in August. And I had you and Harry Sudak and some other people right back to back there. A lot has changed.
The world is a completely different place.
It really is.
And despite where the Bitcoin price is today, I couldn't be more bullish.
I mean, for all our audience knows, we could be recording this in November 24, based on that clock over my shoulder.
I hope everybody has a happy Thanksgiving and a Merry Christmas. Yeah. No, but in all seriousness, a lot. It's crazy how much has changed in 18 months.
You think it's changed Bitcoin, or is it just people learning? Is it the market changing?
No. I mean, Bitcoin, the protocol, is doing what it has done for 16 years now. With some changes that happened in like 2017, other merges that have happened. But I think people's perspective of Bitcoin is always changing, and it's certainly adjusted over the last 18 months, particularly as BlackRock and all the other institutions have put the stamp of approval on the ETFs. Now, obviously, Bitcoin is front and center in the American political sphere, and that's definitely a tide change in how Bitcoin is perceived by the government and most likely by the broader public as well. So I think people's perceptions of Bitcoin have certainly changed, but Bitcoin itself is doing its thing. It's certainly evolved and matured.
Yeah, there was we went from Warren Buffett saying that Bitcoin was rat poison squared to the White House's a top White House official from the Senate with key committee members saying we're going to urgently look at a Bitcoin strategic reserve or digital asset stockpile in about 18 months.
Not only that, between when we last met today too, we got attacked by the Biden administration. The banking situation was completely different.
Totally crazy. And they were proposing a 30% value-added tax on Bitcoin mining, which is just, why not just make it illegal at that point? You're regulated out of existence.
Yeah, luckily we have individuals like Pierre Rochard who can go into court and give a very calculated response to why that's idiotic.
I still love that video of Pierre with the carbon dioxide detector walking around outside the Riot mining facility, which, a lot of serious people that know mining or investors, I was saying how great and funny this video was. I'm like, come on, like it's a stunt. I'm like, well, it is a stunt, but I actually think if you polled the public, a lot of people from the Biden administration's language about mining thought that there were literal smokestacks on these facilities.
Yeah. People, broadly speaking, don't understand energy markets, and they hear the FUD about Bitcoin. It's destroying the world. It's boiling the oceans. And luckily we have Pierre. And Pierre, shout out to Pierre. The
Great man, Pierre.
The driest sense of humor. He can tell a joke with a straight face better than anybody, and he's articulate as well. He brings humor to education.
He's a great troll because of that dry sense of humor, and that video was a great troll. There's been plenty of others. I had said, someone else on, I guess while we're on this energy topic, I learned a lot about energy markets from Harry Sudak, from Blake King at Galaxy, and others, but also Daniel Batten has done an enormous amount of work to help raise new academic literature to show, because now you see news reports all the time that literally report that grids are more stable in some place because of Bitcoin mining.
Yeah. And that
crazy.
We see it in West Texas, and I may have my personal views about what the optimal energy mix is for base load energy for grid systems, but I think it's inarguable, particularly in West Texas, how Bitcoin mining has played a prolific part of the expansion of wind and solar generation, particularly, and really enabled the Texas grid to expand at a time when demand was increasing significantly post-COVID. And I think anybody that is paying attention and understands ERCOT and Texas's grid can recognize that Bitcoin mining has been pivotal in the expansion that's been completely necessary, as you've had not only the Bitcoin and the mining industry move down there, but Tesla, X is down there now. All the comedians are moving to Austin.
I saw that.
An incredible increase in energy demand, and Bitcoin mining is the what did Brandon Quittem define it as? The
mycelium?
Mycelium, but the species, the pioneer species, go out there and make sure that the generation had a buyer of first and last resort when it was being built out.
Yeah, the amount of electricity that's needed to in this new future with all of this AI and high-performance compute stuff, I thought it was really, really funny because it's a big deal, but also really funny that you have now the hyperscalers that service the big tech companies needing all of this. All these McKinsey reports and whatever, consultant reports saying how much more gigawattage of data center capacity we need. And I was like, there is one industry that's been buying up and building out massive data center projects all over the world even. Isn't it funny that it comes down to Bitcoin mining again, and now many Bitcoin miners, getting involved in one way or another in AI and HPC data center hosting?
Yeah. I mean, obviously with Core Scientific, their partnership with CoreWeave, they've done some expansion there, a lot of investment from CoreWeave into Core Side to build out a lot of their data centers. But that's what, and we're seeing it too with the MicroStrategy playbook. That's what I worry, not only in Bitcoin mining, but in the broader space in Bitcoin mining. There was a period of time last year, particularly when hash price was low, energy prices were high, and you could look over to what was happening in the AI space and see that you had a ton of competition coming to the supply of scarce electricity, and many people made announcements that we're going to pivot, and people really drew the line in the sand. They said we're either dropping Bitcoin mining, going all in on tier one data centers for AI, HPC compute. You had some that said we're going to accentuate our Bitcoin mining with HPC as well. Others said we're going to stay Bitcoin mining only. And I think, considering where AI is in its maturation, I think the best strategy was to just take a step back and let things play out. Because I think over the last 6 months alone, everything that's come bare or all the development on the innovation side of the language models and the inference has really changed the dynamic in that market. And you have the CEO of Microsoft coming out last week and saying, we're gonna take a step back from investing in this infrastructure.
Yeah, there was a lot of hype. I have been personally blown away. Like I wrote off this AI craze like 2 years ago. It's just like really good chatbots. People were like, oh, it'll replace like chatbot customer service or something. It has come a long way since then. I mean, I was using ChatGPT's deep research model. It's pretty good. It can write a 20-page paper that's pretty good.
I wanted to cover the repo markets this morning in my newsletter. I wrote it yesterday, and I used Perplexity's deep research. I'm not sure what LLM.
Yeah, I'm not sure. They're all calling it. I think Grok also calls something deep research as well. But anyway, those.
Yeah, Perplexity is definitely AI on some model. I forget which ones they use, but it is. Like, I was doing in-depth research on reverse repo markets going back to 2017 and checking the sources, and it was accurate. And instead of having an analyst like, hey, I need some data points on how the repo market has changed over the last 5 or 6 years. I was really trying to anchor it to the spasm in 2019, September 2019, and within 20 minutes of just prompting in Perplexity, I had a pretty robust research paper that I was able to read and really digest, and then use that to write the newsletter. It's insane what's happening.
Yeah, the ability to make custom research on basically any topic tailored for you. I've even done it where I've said, I was doing one on choke point, those FDIC documents that have been released because of that FOIA suit. There was one a couple weeks ago. It was like 700, 800 pages, and I was like, I'd prefer not to read this entire document dump. Had it read them all, look at them, then do quantitative metrics like when there was back and forth correspondence between the bank and the regulator, what was the average response time? Like, what was the longest response time? Look at the ones that had an average response time over 2 weeks and like summarize in bullet points what the stated issues were. And it was like great. I was blown away.
It's changing the world, and that's I think that's when I bring it back to like Bitcoin mining, energy demand and the competition for that energy. I think that's what the market is discovering in real time. I think the consensus is becoming, and it seems like if you squint, you look at it hard enough, is going to be true, is that the LLMs are going to be commoditized, and it's better to just wait for somebody to keep iterating on a model to get it to a point where it's sufficiently robust at completing the tasks that you prompt it to complete, and then just build a UI on that.
I'm trying super hard not to say Jevons paradox. Oh, there I said it. Because yes, there was a lot of hype on data centers, but I think the same thing happened when DeepSeek was announced. It was almost like an interesting relation I think our audience will know about is when Cointelegraph like falsely reported the Bitcoin ETFs were approved in like October of 23, and Bitcoin instantly ripped like 18% or something, and then it was like, oh wait, that's fake, and it came right back down to the level it had been. But it told the market that like on this headline, like just if you weren't sure, it's for sure gonna rip on the headline when it's real. Similar, it's almost like the reverse. Like we're in a world with technology innovation that's gonna be highly deflationary. Like where if you could just have a step function increase in efficiency that could just like mean everybody needs like 15% fewer employees or like whatever all at once. Like that's possible. Like the AI stocks retrace that whole DeepSeek, like got it back. I mean, everything's down again since then, but I mean, the whole market is. But it makes me wonder, like, how disruptive is this going to be when we get to some promised land? And on the Jevons paradox side, I think people were like, oh, wait, we might need like way less data centers than we thought. And then everyone's like, actually, even if it is fewer than some huge number we put out, we're still mega short data center gigawattage anyway. And so now the trade's like back on and like it's just people are really trying to do like price discovery on how much electricity we do need. But it's going to be an enormous amount, right, in the future?
Yeah, and then you have the variable that we've seen play out in Bitcoin mining over the last 12 years, which is the machines get more efficient, right? So you can do more with less power. And so like what are the limits to how much scale you need based off the efficiency gains on the hardware side? It's a massive question. It's extremely exciting to follow.
Yeah.
And that's what I wonder if a lot of the funds that really went hard into AI post ChatGPT launch 2 years ago are regretting some of their decisions based off of all the information that's come to market and the dynamics that are at play, particularly with like the idea that these LLMs are probably going to be commoditized, and is the value going to accrue mainly on top of the UIs that are plugging into these LLMs and providing these services.
Yeah. One more question on AI and Bitcoin mining. I was thinking about you were laying out sort of pure play Bitcoin mining, sticking to it officially, which some miners are vocally doing or strategically doing, some kind of hybrid, and then the reverse, like, well, if we can, we'll go all AI. Is there a world where, we talk about home mining, how it decentralizes Bitcoin mining, if you can do it, even whether from a BitX all the way up to having ASICs in your garage or even something more professional, which is great for Bitcoin and Bitcoin mining. I think I saw one of the ASIC manufacturers was planning to produce or announced an ASIC that's like the exact size to fit in a standard GPU rack. Is there a future where like the same benefits that a Bitcoin mining site gives to an electrical grid of being both a sink and a faucet of excess electricity, perhaps like a small fleet of ASICs in every single AI data center could be a sink and a faucet when like XYZ client that you're hosting for doesn't renew their GPUs, just throw in some ASICs there to soak up the excess energy? Like, could we get a very decentralized Bitcoin mining topography where every AI data center has a couple ASICs?
I think so. Did you watch the live stream announcement of Grok 3?
No.
Well, in the Q&A section of that live stream, I caught like the back half of the whole live stream, and the end was a Q&A. And I think the second to last question was about the build out of the site in Memphis. I forget what they're calling it.
Yeah, I saw this. I forget what it's called too, but a big site.
The big site. But Elon was explaining how they did it, and it was incredibly impressive what they did, this, considering the constraints that they had with that site. Like they lined the warehouse with generators, so they're using like off-grid generation to actually power it. And then Elon mentioned this, that because of the variation in power draw driven by the training and the inference that is demanded by people when you're training, the power draw fluctuates up and down, and then inference depending on the demand from the market at any given point in time, pinging the models. And to solve that fluctuation in power draw, he put a bunch of Tesla batteries on the inside of the factory to soak it up. And my mind immediately went to what you were just describing, is like put Bitcoin miners there.
Yeah, he could. It's the same thing. I think when I was in near our site in West Texas, there is a battery farm right near it. Kind of, I mean, it's not identical, but it's similar to an ASIC farm. Right? When the power is cheap, they load up the battery. When it's expensive, they give it back.
And Big Battery doesn't like Bitcoin in Texas.
Yeah, they don't.
No,
I mean, same thing with like Big Peaker Plant.
Big Peaker Plant should be on Bitcoin side. You should be able to turn those peaker plants on 24/7, 365, and mine Bitcoin with them. And then if you have insane demand, send it back to the grid. But the batteries, they put a ton of investment in them. And word on the street is that the battery lobby is trying to torpedo energy deals.
Because it has a
between Bitcoin.
similar use
Because
case.
it directly competes, yeah.
So wait a second. Is Bitcoin a battery like then in that spot?
Yeah.
We've heard that before.
Yes. I think load balancer is the better
Yeah.
for trying to be very specific with definitions and semantic, if you will. But I think as an analogy, it is a good analogy.
You're on the board of Cathedra Bitcoin, which AJ Scalia and Drew Armstrong, two great executives, operate. What about the public miners in your mind, just as a cohort, like in this? Now you got MicroStrategy, obviously a huge player in the sort of Bitcoin equity space. You're probably going to you got Fold that recently debuted as a public company for Bitcoin only. You're probably going to have a whole cohort of new public companies under this SEC coming out of crypto. Like, how are the miners? How do they fit into what could be an expanding portfolio of crypto equities?
Well, they have to get back to actually running good businesses and cash flowing and making profits. I think that's the biggest thing going on in the Bitcoin mining industry and the public markets right now is a come to Jesus moment of, hey, we were these vehicles that could give people who invested in public equities proxy exposure to Bitcoin, and we were the only ones that existed for 3-4 years maybe. Then MicroStrategy came and really changed the game, and you have Semler Scientific and now Fold and others that are really leaning into Bitcoin as a treasury asset. And for the longest time, when miners were the only game in town, they were able to hit ATMs, raise a bunch of cash, dilute shareholders, buy ASICs, and they got themselves on the ASIC hamster wheel. And for a period of time, they were rewarded for taking those bets. And I think that was a combination of they were the only game in town, and honestly, equity analysts really didn't understand the nature of the economics behind mining Bitcoin. And a lot of public miners that went and deployed that strategy, if you dig into the numbers, they're not as profitable as many public equity investors perceive them to be. And so I think right now, as it pertains to publicly traded miners, that's what a lot are trying to figure out is, okay, what is my strategy? You won't name names, we have many going out there and employing a MicroStrategy strategy of tapping convertible note markets to raise cash to buy Bitcoin and use that as their Bitcoin accumulation strategy. You have others that are staying the course with, let's try to raise cash, buy more ASICs, plug them in as quickly as possible. Hopefully our energy cost is at a point where it makes it very profitable. But I think one thing miners are going to stay that course really need to hone in on is SG&A cost and CapEx for an initial build out and ASIC purchase and time to get those ASICs plugged in. That's why I'm very proud of what we did in the Cathedra. We learned these lessons the hard way too through the course of 21, 22, 23. We really reoriented our business over the last year and a half with our merger with Kungsleden, which builds data center infrastructure and plays at a different scale than a lot of these mega scalers, which is we try to stay true to that ethos of we need to be cash flow positive, we need to be making a profit, and when we deploy capital, we need to make sure that we're getting revenue based off that capital deployment as quickly as possible. And so we target smaller scale operations, anywhere from 10 to 20 megawatts, dink and dunk, build up a portfolio of data center assets. And then another thing we do is we've diversified away from pure prop mining to building the infrastructure with a hosting model, which provides much more consistent and predictable revenue. And then on top of that, leaning on MicroStrategy, I think one thing that Michael Saylor and the team there have done well is really introduce this concept of Bitcoin yield. And I know it rubs people the wrong way, but if you really dig into what Bitcoin yield actually is, which is sats per share, is that going up after every equity raise or convertible note deal that you do, as something that people should really be harnessing in on. And in our annual letter last year, Drew and AJ really leaned into that, stuck the flag in the ground and said, hey, this is what we're going to try to do moving forward is build a Bitcoin treasury and make sure that shareholders are accumulating more Bitcoin per share over time as we build out the business.
Marty, I want to ask you about the strategic Bitcoin reserve, because this is another massive difference between summer 2023 when we last spoke on this show and today. I mentioned that the White House official, David Sachs, the crypto czar, he has made a point, although I would say some Bitcoiners upset that the executive order said potential creation of a national digital asset stockpile and not the words Bitcoin reserve. He did make a point when he spoke from the Senate to specifically say strategic Bitcoin reserve or national or digital asset stockpile. Then he said the exact same thing again from the White House lawn on CNBC like an hour later. I think it's pretty clear he knows that these are two different issues or two different versions of the issue. What do you think about the strategic reserve? Like, I guess first, should it happen? Should the United States, not any country, I think case is different if you're not the United States. I think most would agree. But should the United States acquire Bitcoin like strategically for its balance sheet or in some vehicle?
I think a case can be made. I think a case can be made. Certainly, yes. Like, as a Bitcoiner, as an American that is looking at the national debt, the pace at which it's increasing, and what seems to be almost an inevitability that it's going to be a massive problem, that Bitcoin as an asset that has historically produced a 25% CAGR over time is something that you would like the government to hold to pay down that debt. But like I was saying before we hit record, I was listening to Jim Bianco on Macro Voices with Eric Townsend this morning on my flight to New York, and I think he makes a good point where definitions and semantics matter, where what is a strategic reserve? What is it meant to do? It's meant to back the dollar system. And he made the good point of the dollar explicitly has not been backed by any assets for some time now and is backed by the true faith and credit of the U.S. government, backed by our military. And if we're playing the semantics game, I could see that, but I also think the government has very unique problems that are specific to the time that we live in and the bag that it's been handed. And as we're transitioning into the digital age and things are evolving, I would like to see the government be creative and forward thinking. And I think a strategic Bitcoin reserve is innovative and forward thinking. And so I've been partial toward, I don't think we should go out there and say we want to accumulate 1 million Bitcoin. Here's how much we're going to buy every day. I think that sends a bad signal to the market. The Bit Bonds idea makes a lot of sense to me in the sense of if you need to drive demand for the long end of the yield curve, and that seems to be a problem right now. Maybe it's fixing itself. Yields are coming down as Doge gets to work. But if you needed another catalyst to drive demand, maybe adding a Bitcoin kicker to that for individuals and institutions purchasing those treasuries makes sense. I think the sovereign wealth fund is a good idea too, and I think we have great examples of that already here in the United States with Alaska and Wyoming specifically. And I think that's like a cleaner way for the government to accumulate Bitcoin, or a sovereign wealth fund, somewhat separately managed by the government.
I think it is cleaner. I think I don't know if the sovereign wealth fund will happen. I think it's reasonable. The Treasury Secretary, Scott Bessent, said they're looking to monetize the asset side of the balance sheet, which makes sense. I mean, we got a lot of assets sitting around, whether it's the gold at Fort Knox, or land, or Fannie and Freddie, or something else the government owns. That's cleaner because that's an investment portfolio. I think the case for having Bitcoin in an investment portfolio is very well proven. I think to your point about Jim Bianco's point about the dollar being backed by the full faith and credit, I think this is where President Trump has been very clear that he is for dollar dominance and maintaining the global reserve status of the dollar. And so I've worried, I said this in July at the Bitcoin conference, that I don't know, that depending on for what reason you buy the Bitcoin, that could shake faith in the dollar, which some may want, to accelerate hyper-Bitcoinization, but I think it's pretty clear the president doesn't want. So that's what I've been wondering, is if they do it, where and for what stated purpose. But I think the sovereign wealth fund is quite elegant. If they could, I'm not sure, but I'm pretty sure Commerce Secretary Howard Lutnick might be in charge of that, because did you hear at the end of David Sachs's thing, they were like, well, would you buy it in the sovereign wealth fund? It's when he made the statement about Bitcoin reserve or digital asset stockpile. And he was like, I don't know, you're going to have to talk to Howard Lutnick about that. He didn't say Howard Lutnick and Scott Bessent, even though they were both, they're both part of it. It made me wonder if he actually slipped up in revealing that really that's maybe going to be Lutnick's toy to manage. And if I think just Scott Bessent has been very supportive of digital assets, but he doesn't have that much on the record about it. Howard Lutnick, on the other hand, is a mega Bitcoin bull.
Yeah, what did Cantor Fitzgerald just invest $600 million in Tether?
Yeah,
and if you need somebody to advise you on building a strategic or a sovereign wealth fund with Bitcoin at the core, I think Tether's a great company.
Massive holder of Bitcoin. Yeah,
yeah, and they've done a good job of building a treasury themselves.
Yeah.
And the sovereign wealth fund too. Lutnick, the Oval Office meeting with him, Bessent, and Trump, where they announced the possibility of the strategic wealth fund. Like, it did rub me a little bit the wrong way when they were like, we're going to get equity positions in these pharmaceutical companies producing the mRNA vaccines we're so excited about. I was like, that could create some perverse incentives. I do think if we do a sovereign wealth fund, I would like to see two conditions. You only build it up when you have a surplus, so it incentivizes the government to get its act together on the fiscal side. And when you have a surplus that you're pushing to the sovereign wealth fund, it should be in neutral assets like gold and Bitcoin that don't introduce this potential perverse incentive to.
I think that's a really good point.
Mandate things.
You're right. I can see how pharma would be particularly possibly perverse, but really just like any company. Like, we do have a free market. Japan's central bank owns some giant percentage of their entire stock market.
Yeah.
That's not a good free market economy.
And nobody was really talking about this when Trump.
Yeah, I actually didn't even realize that they said that. I guess I totally got enamored by the general clip that was being shared.
Listen, I voted for him. I'm very happy he's president, but Trump, I think this is a part of the way in which he goes about just doing things is he anchors on some incredibly insane idea and just pulls people into the middle of the spectrum after anchoring at an insane side of the spectrum. But TikTok, too. He was like, yeah, we're going to buy half of TikTok. It's like, you want state-owned media? Like,
yeah.
That's like we're trying to get away from, like, USAID.
Yeah.
And everything being uncovered there in terms of where money was flowing and who was getting it, particularly in the media industry, and the inability, and who knows, maybe this was just Trump being brash, but if it wasn't him being brash and he has this inability to recognize that it's somewhat hypocritical to be mad about USAID funding.
Right, or want to defund PBS, but also buy TikTok.
Yeah.
Yeah. It is it's contradiction.
Neutral assets.
I like that. I think that's pretty clever. A couple more quickly on the reserve. Who needs Bitcoin more? Does the United States need Bitcoin, or does Bitcoin need the United States? What do you think about that?
No, I think it's obvious. It's the United States needs Bitcoin. And that's the other thing. Whether or not, I think if the mechanics can be figured out and it makes sense to acquire a strategic Bitcoin reserve in a way that doesn't spook treasury markets and basically cause a run on the global financial system, because treasuries are the reserve asset of choice for many banks and institutions around the world, I'm all for it. But I think most importantly, the U.S. government needs Bitcoin. The best way for it to benefit from Bitcoin is just to let us do our thing. Let the private market, let individuals figure it out. Despite the headwinds that the industry has faced with prior administrations, we've gotten pretty far.
Yeah, we have.
I think it's pretty easy to say that America has a lead when it comes to the Bitcoin industry, Bitcoin held per capita, Bitcoin aligning with the ideals that this country stands for. And that's what I would like to see, is just let the industry flourish, let us figure it out. If you want to put Bitcoin on your balance sheet, I think it would be beneficial for your credit standing in the long run. But at the very least, just take the handcuffs off the industry. And I think if you do that, you're going to look up 10 years from now and be very satisfied with the state of America, particularly as it pertains to the Bitcoin industry.
Love it. And the other one is, okay, what about risks? Is there some risk to the Bitcoin network? If the United States government owns a large chunk of it?
I don't think so.
I was getting asked this a lot about the ETFs, right? Like fork choice selection. What if there's a contentious hard fork and BlackRock asserts itself saying we're on I don't know, a different side from the majority of the, the plebs or the individual owners of it, similar to the block size wars? Is that a risk? Because the government's kind of like a large holder, like MicroStrategy and BlackRock, except they have guns?
I don't think so. I think it'd be, again, it could only risk of America. Like you can basically shoot yourself in the foot and out of the game if you fuck it up. Excuse my language. But it could, I mean, I'm more worried if they were to accumulate, if they were to nationalize the mining industry and control hash rate. And they can own as much Bitcoin as they want, and they could try to influence the open source protocol to push in certain changes, but then you need the network of nodes distributed globally to accept those changes. And I find it hard to believe that that's going to happen if any nefarious changes are attempted to be pushed through the protocol. The mining stuff is what I worry about more in terms of actually owning and operating hash rate that could potentially censor transactions.
Yeah, unlike proof of stake systems, Bitcoin supply doesn't have direct governance control over the network. I'd be more concerned about a proof of stake asset that's widely held by powerful government.
What's the latest on Ethereum and the Bybit hack?
Yeah.
Are they going to do anything about it?
I don't know. I mean, it was 18% of the Ethereum supply is. I mean, I can't independently confirm, but has been reported to be stolen by the Lazarus Group. Yeah, North Korea. That's tricky.
How are they such good hackers? That's always blown my mind.
Somebody was
they don't
saying
even have electricity in North Korea.
This is like a day job for these guys, dude. They must have some smart people for sure, but I think it's like, I mean, actually, we don't have to do much on Bybit, but like from what I understand, an incredibly subtle and sophisticated attack, incredibly so. The guys at Bybit, as far as we can tell, did a pretty good job. Like it wasn't like it was an extremely sophisticated and again subtle attack, mostly changing like a 1 to a 0, literally one
in
operator.
A smart contract, right?
Yeah, and what is? I mean, I think there is a case to be made on this issue that like Bitcoin has native multi-sig and it's a lot easier to human verify, because I looked at the attacking transaction with our custody guys at GK8, and they were like, it's literally all of this stuff, and they just changed this one little thing.
Yeah, and it's hard to verify because you needed the UI in the browser to verify because you couldn't verify.
Yeah, and we don't know what UI they have set up. It's I don't know if they're sitting around with little hardware wallets or probably something much more sophisticated. But like again, it's a lot of stuff in there to like see one little thing. It's an argument for Bitcoin's simplicity in the code for sure.
It's ironic that this happened to a project founded by a man who wrote the thesis on the trilemma of distributed systems.
Yes, that's true. You're talking about Vitalik Buterin?
Yes.
Yes. Artie, before we wrap, this has been excellent, by the way. Great conversation. I want to ask you about Bitcoin venture investing. You're a managing partner at 1031, maybe the biggest Bitcoin-only or Bitcoin-focused venture firm. What is it like out there? Because I've been following just the VC market now for years. I've been producing this chart on like total crypto VC dollars invested by quarter overlaid with the Bitcoin price, literally since like 2019 I've been making this chart. And what I feel like I saw, and obviously we try in that data set to include the Bitcoin-focused venture funds as part of the whole set, but you had a huge run-up in 21 and 2 in Bitcoin price and just an absolute explosion in VC, not even just in crypto and Bitcoin, but across the whole VC industry. That came off huge as rates started to go up, and Bitcoin also went down. But then Bitcoin went back a lot, and VC total activity, and again, not just in Bitcoin or crypto, all VC hasn't really fully rebounded, maybe at the high level for VC, but also just in the Bitcoin VC world. Like, what are you seeing? Is it back? Do you have a bunch of new young entrepreneurs that are excited to build?
Yeah. I think VC as an asset class broadly is really hurting right now. And it's a product of the speculative fervor, or not speculative fervor, but all the money that came in 2020, 21 post-COVID. People were raising a ton, throwing it at companies at insane valuations, and here we sit today, beginning of 2025, and there's not a lot to show for those investments, just broadly in VC speaking. So LPs, we just made the first close on our third fund at the end of last year. And that's what we've noticed as raising that fund, is LPs are highly cognizant of funds that are returning cash and seem like they have the ability to return cash based off of their portfolio. And that's why I feel extremely fortunate to be in the Bitcoin specific investment space, because I mean, you've run the numbers, the amount of dollars that have been raised for broader crypto versus Bitcoin specifically is literally in the order of magnitude of like 100 to 200 to 1.
Yeah, I mean, I was thinking 99+% of all crypto VC went to non-Bitcoin companies,
Yes.
just in general. I mean, you can almost pick the time frame.
Yeah, and so for us at 1031, we timed the raising and the closing of our last fund really well, where we closed that in March of 22, and then we were deploying over 2022, 2023, and last year, which is a great time to deploy. You had the FTX blow up at the end of 22, and obviously the price of Bitcoin came down, and valuations for companies. So we had good entry points, but I think also the benefits of a cataclysmic event in the space like 2022 forces companies and founders to really dig into their souls and say, all right, what am I doing here? What am I building? What is this business going to be? And I think Fold going public last week is an incredible example of that. I think they survived 2 bear markets, and that's one thing we look for in founders and companies is, has a company survived a bear market and come out the other side, maybe not unscathed, but having learned the lessons of what it's like to be in this volatile market. And to your point or your question about are there good opportunities out there in terms of companies? Yes, I think building on what we were saying earlier about the dynamics of the market having changed drastically in the last 18 months, I think Bitcoin being established as a $1 trillion asset class and higher, being able to sustain that liquid market cap for an extended period of time has really unlocked the minds of people in TradFi that are beginning to recognize Bitcoin as something that they will have to incorporate into what they're doing. And so I think whether it's companies that are really pushing the forefront on things like insurance, like Anchor Watch, or companies that are beginning to use Bitcoin as collateral and credit structures like Battery, I think what we're beginning to see is the opposite of the big theme in crypto last cycle, which was DeFi, which was we hate the banks, we hate TradFi. We've got these mechanisms to build a new financial system on these blockchains with these tokens over here, where I think that's misguided. What really, I think where the signal is and where a lot of the value is going to accrue this cycle and maybe for a couple or just into perpetuity from here on out is the Bitcoinization of traditional finance, where you have this system built on a ton of credit that needs to be refinanced with better collateral. And so in terms of companies that are really exciting us at 1031 these days, it's companies that are really playing in that intersection of the bridge between Bitcoin and traditional finance and the Bitcoinization of finance.
It's super interesting. It has been a Bitcoin-dominated market. I mean, for a supposed broad crypto bull run, Bitcoin dominance as a metric is at unprecedented levels. ETH never got within, I think it was, at most, it was still 40% below its all-time high.
Yeah. I mean, it topped out, the ETH BTC ratio topped out in July 2017.
Yeah, that's true. And also, since September 2022, it's been down only. I do think there's some signal there. And I don't mean to particularly pick on Ethereum specifically, but I think it's true if you look across crypto. And I was asked by a reporter, like, what do you make of the divergence in sentiment between institutional and retail on crypto? And I was like, well, one of the things I make of it is that everyone's buying Bitcoin and no one's buying all these altcoins. I mean, you had Solana obviously driven by like meme coin frenzy, but like, Mubadala, as far as I can tell, I looked at the 13F filings, this Abu Dhabi sovereign wealth fund, they didn't buy ETH ETFs.
No. I
mean, they might one day. I'm not saying they won't, but they didn't.
Yeah, and we saw it here stateside too. The demand from retail for the ETFs for ETH or Doge, Ripple, whatever it may be, the baskets. It wasn't as strong.
Actually, ETH BTC is down like more than, or now I think slightly more than 50% just since the ETH ETFs were announced in May of last year.
Well, I really don't think people going back to like the $1 trillion market. I don't think the broader crypto industry really appreciates how institutional capital views that sort of that trough that Bitcoin has sort of defined itself at, and the liquidity that exists there. And I had James check on chain. If you're looking for good on chain analysis,
James.
go check out James. It's funny because his name's checking. I said James check, but
Yeah.
he was on my show last month, and he threw a stat out there that blew my mind that I wasn't even cognizant of. In November, when Bitcoin had its run from, I believe, 80 to 90K, it had like a 7K or 10K wick in one day. That one wick was 60% of Ethereum's market cap. And
That's crazy.
And so you're literally in a whole nother order of magnitude type of market when you're talking that. And the years and the days of Ethereum or Solana or whatever, pick your altcoin, genuinely thinking that they're going to flip in Bitcoin are well behind us. They're never coming back. And so you have to compete on these metrics that really just...
Oh, it's a technology battle down there. I think you've got an asset up here at a minimum. Probably, I mean, it looks like maybe we'll get some more technology innovation. Like, I mean, Bitcoin's always evolving. We may get even more evolution and innovation for Bitcoin protocol technology, but I mean, it could probably ossify and live on well as that growing giant institutional quality asset.
Oh, totally.
These others can't say that. They need to fight in the trenches of technology innovation, right?
Yeah.
It's sort of like I think this cycle more than any other has really separated Bitcoin from the pack, which has been fascinating to watch.
And it's funny too. It's been succeeding at the narratives that the broader crypto industry has said it's going to beat Bitcoin at wildly. Like the Lightning Network is the most distributed L2. Not a big fan of the term, but it has become commonplace and sort of nomenclature in
It's
the
actually a
space.
distributed network.
Yeah, it's literally the most distributed layer
It's an
2.
interlocking web of bilateral payment channels. There is no central part. I mean,
And it's becoming more efficient over time. People are pulling Bitcoin.
I saw that. In fact, I think River just maybe today published a new
Yeah, they
Lightning
published
report. I haven't
their-
read the new one yet, but I think I saw a graphic that Alex Leishman sent me that showed exactly this, like the same amount of capacity with like, or the same amount of channels with much more capacity with something like that.
Well,
clear efficiency gain.
Less capacity is defined like in Bitcoin
Yeah,
channels.
and more payments or something.
Yeah,
right?
more payments and more volume.
Yeah.
USD volume, because you can be more like what we're learning is that people really people oversaturated the Lightning Network to a certain degree with liquidity, and what we're finding over time is the network matures, you can do a lot more with less capital locked up.
Especially as the node software gets better, the routing tools, analytics for performant nodes to just get way more efficient.
It works. I use Lightning literally every day, whether it's via podcasting 2.0 or zapping on Noster. You go to the park in Nashville, you have to buy coffee, you're paying a Lightning. Get a pub key here in New York.
Yeah.
I make it a point to pay
Yes.
with Lightning.
I love what they've done, by the way, at PubKey with, well, first of all, everything. But second of all, it's every staff member at that restaurant and bar is trained to do Lightning payments. So that's one of the main reasons I like it is when they hire somebody new, and I'm like, oh, you're new? Like, I want to pay in Lightning. And they're like, oh, crap, I did the 2-hour course or whatever. And they have. And it's not that hard.
And it's getting easier to learn.
Yeah,
too.
it is. And I mean, those guys, with the help of Evan Clutis and Zeus and whatever other tech stack they're using, I know certainly Zeus. It's like a handheld payment device. It's just like it's like the same thing as a Square card or whatever, the Square payment device.
And right now it's typically like QR only, but the tech is getting there, and the UI and the UX around it is getting there. Where soon we're going to be able to NFC tap, because it's going to be tap to pay from Bitcoin while it's not too far away.
Well, this is amazing, Marty. Fascinating conversation. Congrats on all the success with Cathedra and TFTC and 1031. And thank you for coming back on Galaxy Brains.
It's always a pleasure, sir. I got to get you on TFTC in Austin.
I would love to come. I don't know when I'll come to Austin.
I miss the days of teaching Clubhouse little minions about Bitcoin.
I've got this whole crew: Harry Sudak and Jeet and Terrence.
We do that Monday night,
dude.
Bitcoin
Rob
Club?
Hamilton. I mean, dude, Hodl, American Hodl. All these people. It might have been Wednesday night. There was a cool 9 months in I guess it was the very end of 2020, and then like the first 6 months of 21 before Spaces launched on Twitter. That was like the best. I mean, dude, I was like driving my car with it plugged in audio, listening to like you talk with somebody, and then I'd be like, oh, I got to chime in here. They're inviting me to the stage, but I'm in the car, so I'm going to use the push to talk on the steering wheel. I'm like, does this work? I mean, that was the great times.
And that was a great dynamic too. Because like I could talk mining at that time. I was heavily in the mining business, and then somebody's like, "Oh, we need Bitcoin 101." I was like, "All right, I'm gonna tap Alex in here."
Yeah, I know. And or we were like, "Oh, someone's asking about energy grids," and we were like, "Oh, Harry, can you do the spiel on this?" Honestly, a great number of friends were made during that time when no one could go outside really, and there were no meetups, and it was before Spaces, and also the market was terrible, but then awesome, and then but we couldn't really do anything. A lot of friends were made. A lot of prominent Bitcoin educators and operators. I mean, Becca and Rob met on Clubhouse from Anchor Watch. I know many such cases. That was a real moment in time, actually.
You know what they say? You don't notice you're in the good days when they're happening. But those are the good old days.
These are the good old days.
Yeah.
We got to be constantly peaking, though, you know?
Yes.
No taking time off.
Yes.
All right, my friend, Marty Bent, managing partner from 1031 and board member of Cathedra and founder of TFTC. Thank you so much.
Thank you, Alex.
That's it for this week's episode of Galaxy Brains. Thanks to our guest Marty Bent from Cathedra, 1031, and TFTC, and our friend Beimnet Abebe from Galaxy Trading. Everyone have a safe and happy weekend, and we will catch you next week. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXYResearch. See you next week.